Good morning, ladies and gentlemen, boys and squirrels. All right, I'm gonna go get a coffee. I'll be right back. Alrighty, what a day it's gonna be here, ladies and gentlemen. Hopefully something cool happens. I mean, well, cool. Market's a little bearish right now, so when it actually goes back into a buy signal, we'll see if we get some action. Good morning, one person. How are you? Yeah, well, market, pretty much everything you need to know right now is on the screen. Market, you're not long biased. The market is neutral to bearish. We'll go back long bias the market when it makes sense to do so. I'm actually holding a little bit long right now still, just because I'm just assuming that leading into Christmas we're going to have some sort of Santa rally. Hey, what's going on, Paul? Thank you. Good morning. Good morning to you. Yeah, sorry. Oh, yeah, I also put in there our live stream thing. Actually, I should probably speed that up. I could see that's moving a little slow for the liking. Anyways, the ticker scroll thing now says I am streaming 9 a.m. to 11, unless traveling. So pretty much anytime I'm not on is usually when either I'm working on one of my rentals or I am gone. And currently my travel computer is broken. I gotta get the screen fixed, so I haven't been able to use it when I was traveling these past couple days or whatever. So let's try and speed that up a bit. That would be too fast. That looks good. Oh, that looks super fast now. We'll start with that. Looks decent. All right. Yeah, so sorry about not being on yesterday, but yeah, just didn't have the means to. I was not at home. And like I said, my travel computer is broken. Screen's broken. But anyways, hopefully everyone's doing okay. Silver is doing great. And gold. Just as, what's funny is I remember I was talking about selling off like half of, all of my physical gold and silver. I still own paper, obviously. But yeah, I sold off my physical gold and silver. And sure enough, the markets went higher. And I mean, like, I knew it was going to happen. Like, it was very likely that would be the outcome. But that's why I kept my paper gold and silver and didn't liquidate. Well, I didn't liquidate that because I didn't want to. But it's just funny because it's like, obviously, but yeah, it is what it is. But yeah, so kind of happy about that. We can see, I think gold's back to pretty much all-time highs or close to, and then silver is, can I add one more to this or am I out of space? Let's see. Yeah, not gonna pay because that's stupid. Who needs to do that? Is there two? Oh, there's two. I don't need this. Move that guy. Sweet. Where did it get added to the watch list? There it goes. Yeah, silver's all the way up at $58. I'd like to see silver get into this green box. That's why I have that green box on the screen. Anywhere into that green box would be amazing. We discussed this on silver a couple weeks back about arguably can get all the way up to like $80 if it wants to, maybe even 84s, something like that. So yeah. Again, there's a lot of momentum on it, and it's so far it's just, it's not, you know, it's nothing, not, there's never a guarantee in the market, but it's moving with the sort of momentum that, you know, many times can take markets to +3, +4 standard deviation areas, which would be that green box. So it's just gonna kind of got that feel to it. It's kind of got the hype, if you will. Just, I don't know, the articles on the internet, a lot of people discussing it, talking about it, happy about it, yada yada yada. It's just kind of like that cycly momentum, hypey. It just seems like it's getting that sort of attention that we may be able to take the price to very euphoric levels as it relates to probability channels. So fingers crossed. Hope it does. If it doesn't, again, doesn't actually matter because you can't take any of this with you when you go. So it's really just to have fun with while you inhabit planet Earth. Hopefully make your life just a tad bit easier while you're here, but don't go attached to it. No point. So yeah, anyways, markets, as far as the volatility index go, are slightly positive. If those start to break down today, we're going to see the markets go into a long. When I say go into a long, it just means that if for whatever reason the markets want to shrug off volatility, then we'll probably see a bounce on the market today. Again, you know, it's always dependent on the levels, you know. Do I care if the market bounces today? No. But again, just looking at the volatility index, which we will bring up here in just a bit, we can already see that it's close to said levels that if it did not maintain, markets would then end up bouncing, right? So we'll bring that up here now. I gotta clean this up just a sec. Yeah, okay, so right there. So that level right there, so far pretty much where we created today's pre-market low, because obviously that's the algorithm level. So right there, that yellow line, below 1625. If the volatility index breaks 1625 down, gets acceptance, you're going to see the stock market basically just go up. Well, not totally, but I mean, that's, again, if you just think of things simply, that would be the case. If markets volatility break down, then people would be less fearful. They'd be more optimistic. Optimism leads to bullish action, so on and so forth. So that's pretty much what you should be watching for if you look at the volatility index. That's what you'd be, when I say that's what you're looking for, it's not even really what you're looking for. It's just once you know the level, then you would know what to look for. You know, it's not like you're seeking it because that's what you want. You're just seeking that because you just know that's what happens. You know what I mean? So we would be looking for what? Does the VIX break down or does the VIX hold above? That's it. If VIX holds above breakout level, market is still somewhat scared-ish. Right? If it were to break below, markets would be less scared, more optimistic, right? And the outcomes of those are uppeth or downeth, right? So that is that. Again, it's a repeat of the same thing every day, over and over and over, pretty much. When you come to this stream, you will not see the strategy change. Well, that's not true. But for the most part, it will be the same strategy, same rules, repeated over and over and over. We may use different tactics at different times, but ultimately it all stems from pretty much this when we're talking about VIX and the markets. You know, we don't arguably need to sit here on stream and try to teach you too many different things because this works. You know what I mean? And it's worked for, I don't even know, too long to count, right? So I don't need to sit here and, you know, tell you to look at MACD, RSI, trend, this, that, the other with a bullish inverse head and shoulders pattern here. No. Just a couple simple moving averages, same system, always, day in, day out, week in, week out, month in, month out, repeated. And then from there, you can layer on whatever else you want that helps you more so. But we'll start here and always be here every single time. So that's the VIX. So let's just kind of be very elementary. So over the yellow, fear is elevated. Below, well, let me do one more little cute line, right? Fear is elevated above. Below, fear starts to decrease and markets go back long-ish, all right? So now if we look at what the market's actually doing, so what's the market been doing for a day or so? There it is. Here we go. Oh my lord, I hate TradingView sometimes. All right, so what do we know? We know that the VIX is a little positive. It's still low priced, but it's definitely on the positive side, so it's hard to get that positive movement on the market. And then we also, and I'm going to delete some of this stuff, we also know that the market is currently priced below the 50 SMA. So if we look at where the 50 SMA, it's right there. Well, it was there, and then it was here, so I'll just use both of these. All right, and we know that over the past day or two or whatever, right, market broke down 50 SMA. That's when the VIX started to break up over its 50. So now the market structures are changing. The market makers are essentially, when I say market makers, that is entirely true. The market makers are starting to change structures of markets, you know. So then this would be the bounce up / the back test of the 50 SMA. Then this would be your lower high, and that would be your leg after the lower high down. And you can see even with today's bounce, the market is still priced below the 50 SMA. So structure is still on the teddy bear side, right? Or / neutral, if you will. But we are not on the higher low trend up side, okay? So again, to put it very simply, it's the same system every single day, over and over and over, repeated until the end of time. We may discuss other things, but ultimately it's all layered on top of this one system. And the more you study it, the more you learn it, the more you will, for the most part, understand markets. And at least in the short term, to a degree, you will definitely be, you'll be on the right side of the markets many, many times. So that being said, markets are neutral, bearish, because, as we've already stated, VIX is slightly positive and markets are negative. We will go back long bias the market trending when that changes. When does that change? When the market wants to change. When does the market want to change? When the VIX breaks down or the market goes back into a positive territory. When does the VIX break down / where does the VIX break down? As we've already discussed and as we've already covered right here. This yellow line, that's the control point. If the VIX maintains above, the markets are still fearful. If the VIX goes below, the markets are going back to optimism. All right, so that's the level that we would use to dictate essentially bullish bearish narrative on the markets via volatility. Okay. When does the market go back to positive, back to bullish trending side? When it's established above the 2 yellow lines on the market there. Otherwise, we're in a downtrend. So all right. So we've effectively covered the largest globally traded ETF in the world. And how many minutes is that? Well, I don't really know exactly, but probably about 10 minutes. So essentially you have everything you, for the most part, need to know about the market and the trend and when it changes and how it changes and why it changes. Not bad. Not too shabby. The question is, what about? I don't know yet. I mean, whether it be tomorrow or a couple days or whoever or whenever, but I will be introducing a M1 portfolio to the live stream. And yeah, objective, there's only 2 people, but regardless, objective will be to basically, well, I mean, whether you're going to call it a case study or not, we're just going to put an M1 portfolio up there with a couple different, we're going to do a simple dollar cost averaging portfolio, because obviously most investors should probably follow that, so we'll do one of those. And then we're also going to do a little bit of a smart money portfolio, which will be a variation of dollar cost averaging, market timing, standard deviation buying, and some other things. And it'll just kind of be used as a case study, because obviously all financial advisors always recommend that you should pretty much just dollar cost average the market. So the objective is we're going to basically create at least one portfolio that would typically be what the average United States citizen would be able to invest comfortably over set periods of time, to hopefully mimic that of what I think most people may be able to do in the world comfortably, as far as dollar value, dollar amount invested, and so on and so forth. We will also be using a, at least for the moment, until we see the returns on it, we will be doing a Monday buying structure. So we'll buy as long as we have enough capital to do so when the day comes. But we'll be buying on every single Monday. So each Monday, market open, buy, because historically Mondays generate better returns, or have the opportunity to, outside of any other day, because a lot of times the markets decrease over the weekend or from Fridays into the weekends and overnight, etc. So then Monday morning, a lot of times markets can be on sale historically. So we're going to use Monday as our buying day for the dollar cost averaging. And then when markets are on sale, from a statistical probability standpoint, we will then increase capital investment to lower dollar cost average over longer horizons. So that'll be somewhat fun. Good morning to the three beautiful souls. Good coffee, good coffee. You know, part of me wanted to, I'm kind of having somewhat second thoughts of my initial approach. My initial approach was to do 3 portfolios for the stream, which would be, one is a simple dollar cost average. Then the other was, or was it, hold on, kind of forgetting now, but there was going to be 3 portfolios. One was a simple dollar cost average. I think that one may have just been like, regardless of the day and time, you just buy. Then I think there was another one, which was going to be, no, I don't think that's, man, I'm forgetting. But either way, there was going to be a Roth IRA one, and then there was going to be 2 non-qualifieds. And they were each going to follow a very similar but somewhat different structure, which was, one was going to be just simple dollar cost average. The other was going to be dollar cost average while timing market bottoms, if you will. Not timing, but making sure that when markets are on sale, you're investing more capital as it's related to statistics. And then the other one was going to be like maybe VTI and VU, a mixture of low cost indexes, also standard deviation timed. But and I'm like, do I really need 3 portfolios for it? I already have a bunch of other things, so I'm like, we'll see. But yeah, that'll come in pretty soon here. So, like I said, I am, maybe I should just add that. I'm just going to add that to our ticker scroll, so I don't really have to say it. Add filters properties. Alrighty, so yeah. Anyways, I will mention it. Yeah, I'm long UPRO. Been long since last week. And this is really, it's small long position. Looking to arguably average in some more. Assuming that there will be a Santa rally in some fashion or another. And a lot of people might think that, the Santa rally has to be like rallying over the previous highs. I don't really see it like that. To me, the Santa rally could come after a dip where the rally is still just within previous bearish price action or something. So I'm just assuming somewhere leading into after Christmas, on the holidays, whether it be New Year's, again, don't really care. Just assuming we're going to see some sort of bullish activity, whether that comes from a bounce, whether that comes from a bullish move that is not above any previous high, that's just battling through previous downtrends. Some fashion or another, there's going to be some bullish move. And if there's not, then that's going to be the first time in a long time. So, again, we'll see. But, yep, so just still long bias the market, even though we're on the neutral to bearish side, because, again, my bias assumes that the holiday is going to lead some sort of activity to the long side that we can involve ourselves in, even if the position has to go red for a bit. Don't really mind. And I haven't taken on enough that it's going to damage my account in any harmful way. But yeah. And that's also because I know that we're kind of neutral to bearish and things are still a little shaky. So that's why I just haven't gone just a full-blown long or anything like that. It doesn't make sense. Markets aren't optimistic like that. So we'll bring up the VIX real quick just so you can kind of see it again. So you can kind of already see how we've drawn it out, right? So far it's already operating just like our picture has been drawn, but and when I mean that, it's just, again, once you know the algorithm over under, then it's just, if it's above, markets aren't quite, you know, like you can see right now, if you look at the SPY just like, I mean, I guess the market's only been open for like a couple minutes, but, you know, the market's not really going up right now, you know. VIX is what? VIX is still on the long side, right? So markets are not as optimistic right now. Markets are still slightly fearful, you know what I mean? So now let's just take a peek at the market internals real quick. So since the market's opened, the FANG Magnificent 7 have had one green candle and 1, 2, 3, 4 reds. There isn't just immediate bullish movement on the S&P, some net, and so pretty much what we have is somewhat of a mixed open, if you will. Things aren't all bearish and things aren't all bullish. So we have what I would call slightly mixed open, which basically means just that. Things aren't extremely bullish and they're not extremely bearish for the moment. But one thing is also certain, the markets are still somewhat fearful, right? So though we have a mixed open, one could be like, oh, it could turn bullish or what have you. But then I come here and I see that the VIX is still positive. That's not something I like to see. So I would still be less long bias in general because the VIX is positive, right? And we have a mixed open. So I'm not going to go, oh, well, it could turn bullish. No, no, no. It's a mixed open with a somewhat elevated feared VIX. It's not the ideal scenario to just assume the markets are just going to rip into a long, all right? So, what does that mean for me as far as thinking I know something? It's more confirmation, which is if I wanted to be long bias, I would need the VIX to break down. Or if I wanted to be long bias extremely, you know, like actually going long, then we would need to see the market internals all screaming long, right? So those aren't happening. So we could be more long bias if the VIX broke down fear or if the market was just screaming into a long. Neither of which are happening. So long bias trading and whatever have you kind of slightly off the table. These things can change quickly, but that's what you'd look at, right? So what do we know? We know that like 8.5 times out of 10 the market will not go up if the FANG are going down or Magnificent 7 are going down. Those are currently going down. So we're just going to assume that there's not going to be any sort of great long pressure on the market because that's going to be correct 8.5 times out of 10, pretty much. And I said 8.5 because the other day the market did actually kind of go up with those going down. I'm like, no way. That's the first time I've seen that in like a month. There's one green candle on the Magnificent 7 and market starts to pop a little bit. See how that works? So that's the kind of thing is like, it's a very immediate thing, right? You don't look at those and go, oh, they're all bearish and it's just going to stay that way for forever. It can be candle by candle with that system because again, remember, look at that one green candle we just put in here on this Magnificent 7 ticker. One green candle here took out all the previous 1, 2, 3, 4, 5 candles that were red, right? So those are things you got to think about, I guess. And now look at the market, just like that, popping up. So like I said, things can change pretty quickly, but those are things you know for certain. All right, markets only go up if Magnificent 7 tickers are pretty much going up. Super busy stream here today, super busy. I almost don't know what to do with myself. We're having so many questions come in. There is just so much busyness here in this stream. Sorry, I'm just sitting here in my office by myself. Again, you know, it's not, I mean, I don't have a ton to say here today. I guess that it seems like that's, I guess I have to learn something else, because else I'll just basically never have anything to say. But yeah, so good day, great day, fun day, I guess. But yeah, that's pretty much it. And you guys know, you guys have already learned this. You guys know why we're holding where we're holding, right? If you take a VWAP and you go to the pre-market low, I mean, it's not perfect, but you can pretty much get an idea of why we pulled the market back there and why we're kind of flirting with that. So if we actually do it, let's do it like this. We'll do a 2. So that little yellow zone that I put on there, that becomes our intraday VWAP over under. So you see how and why we're holding this area as support right now. And so if you think about it like this, the market all morning in the pre-market was going long. This is the key volume trend of that long. And so here's the reset. There's the bounce. There's the open reset. There's the bounce. If we get below that, that's where we kind of start to shake things down a little bit. Not that it's going to look like what I just drew, but ultimately we just know that you can already see it in terms of structure, right? If you look at the patterning of the market, right? Up, reset, lower high, structure down, arguably, right? So that's just something we always think about in the back of our mind. So like we just saw, like, you know, like we just talked about, the main systems, the 50 SMA on the VIX and the market and so on and so forth. So we know the market is kind of in that neutral to bearish environment, but there's things like this that we will use, like 30-minute VWAPs, to get an idea of where some short-term bounces were going to be, or where some pullback destinations can be inside that other system, right? So what do we know? We know that the market is what? It's below the 50, so that's bearish. But we also know the market likes to trade around 30-minute VWAPs from the pre-market. So what did we do today? We took a VWAP of the bottom of the pre-market, and that gave us that little zone that we're battling with right now, right? So we're in a 30-minute downtrend or 30-minute neutral market, while at the same time using the volume-weighted average price created from today's pre-market session, which basically creates a zone around 67950 to 67907, and that is currently kind of our little over-under trend that, if supported, market holds. If we break it down, things kind of get a little dicey and shake people out, right? Many times. So that's that. So we'll see if we get a little momentum down here. It doesn't have to be the case, but if you're really going to get some momentum, you're going to have to stop out the long traders from today's pre-market and so on and so forth. Just like that. Voila. All right, and remember, what did we say? The VIX is what? Remember, the VIX is positive. Let's shrink this a little bit and move this up. So remember we said, right, the VIX is positive. Is the VIX breaking down? No, it's not below that yellow line. So that means the market is what? The market is still a little fearful. Now, you might look at the VIX and go, oh, it's only priced around 16, 17, right? That's not a very high VIX. Granted, it's not extremely low, but it's not very high. So that's another thing that you have to understand, is that the generic elementary educational teaching of the volatility index is that if the VIX is high, the market is fearful, high priced. If the VIX is priced low, the market is not fearful. That is baseline true, incorrect in a deeper thought, which is the VIX can be fearful, or the markets can be fearful, even if the VIX is priced low. It just depends on where the trend is at, right? So we're in a low fear VIX, we're in a low priced feared VIX, but we're in a fearful trend VIX, right? Which is the trend of the VIX has flipped from not fearful to somewhat fearful, because it's above and it's positive, and that could lead to higher pricing on the VIX. And since it could lead to higher pricing on the VIX, what are we doing on the market? right? So since the VIX is positive and it could lead to higher VIX prices, what are we seeing from the stock market? It's doing what? Oh, it's making lower highs. What are the odds? Duh. You know? So, as we already mentioned, from the last time I was on stream to where we're at now, the markets are getting somewhat skeptical of the market. We're pulling it back. And that's pretty much that. You will know to be long bias when I pretty much say to be long bias the markets, and or if you guys listen to the system. So again, you don't have to listen to me once you learn the system, which is pretty much everything we've been talking about today. So now that we've done all that, we'll go back into my other bag of tricks and we'll see what we might have in store for us. All right, so market is obvious. Oh, and remember last week I said the market has been making these back-to-back false crosses, so we're in kind of a sideways consolidation market. Only when the market gets above or below the established high and lows from the kind of false signaling will we have a breakdown. So that's how we have it mapped off. We basically said from this moment here, false cross and false cross, you map off the high and you map off this low. And your breakdown or breakout of somewhat of a better trend comes below or it goes above. And everything inside is a chop market, arguably. Either way, that's fun stuff. Let's take a look at our last buy signal trend, see if we're near that or if we broke that down. So if we go from here, see there's another thing is we've taken out the volume weighted average price of our last buy signal trend, which is this line. So that's kind of like a secondary defense, right? So if we take about this low, this last buy signal, market was going up, choppy, gets a sell signal, goes down, hits previous buy signal trend, bounces, stays below 50 SMA, lower high, now below previous buy signal trend. That's could become a big wash level, arguably. Again, guys, volatility index is up and is fearful. Therefore, we're not very long biased the market, even though I have a long on UPRO. I've positioned myself to expect the market is going to go down. If you watch the streams from last week, we pretty much said that we'll probably have a pullback going into Christmas. The markets will probably pull back. We did not expect the markets were just going to continue to just rally on throughout December, right? We expected that if the markets were going to do any sort of Santa rally, they would probably sell the markets down to rebuy the dip before the Santa rally. So far, I would say the first portion of that statement is true. We have no idea if the second half of that statement becomes true, but we're hoping, fingers crossed, because we know undoubtedly that hope is the best indicator for the stock market, right? Hope always works. What you guys don't know is I got a pipe on this desk, and it's always filled up with hopium, ready to go. And let me tell you, it's strong. All we want in life is more hopium. Hmm. Hmm. That's good. Good stuff. Oh boy. What else interesting is going on? Oh, let's cover Bitcoin. We haven't done that yet. So Bitcoin is doing everything that we always would expect it would be doing, which is going down, since we said it would go down. Now, um, yeah, I mean, let's see. Real quick, I just want to show you what we're doing right now, which is nothing that we haven't already discussed like weeks ago. Pretty much, let's just recover. Let's recover. What is that? Let's review. So when the market dropped to here, and then it started to bounce, we said take a VWAP, anchor it to this low. The market will then use that as support in the future. Ready? Bounce up, pull back, support, bounce. Starting to lose structure a little bit, rolls back, worse, kind of shakes it down and kind of bouncing. Either way, bottom line is, as we said weeks ago, once you bottom here, take VWAP, anchor low. You'll then figure out the expected future trend of Bitcoin to some degree. Okay? So that's kind of the short-term stuff, kinda. We here on this stream have zero reason to be in, well, that's pretty confident, Connor, but confidence breeds more hopium. So we have zero reason to think that Bitcoin is going to go on some miraculous, long bias, bullish, bull marketish, trending move until I show you this, which is number one. Scroll out, find the most recent all-time high, take a VWAP, anchor it to the high, make sure the settings of the VWAP are turned to high, hit OK, and you're done. In a nutshell, we already know there will be no extended bull run on Bitcoin until minimum market is established above that VWAP. So this bounce, whatever. This pullback and bounce, whatever. Even if the market rallies all the way back to here, whatever. Why? Because as it runs up into here, this is all just still resistance that can roll it down. Okay? So, all I'm getting at is any bounce, any news article, anything telling you something, just pause, yield, and know there will be no bull run until we've established confirmation above the volume weighted average price of the current bear market cycle. Cheers. Paul, pretty much yes. Yeah, I do. I expect a downward. So this is where I probably should mention something. Yes, to answer your question, simply yes. to answer your question more complicated is that when watching my stream, many times my target prices are not, how do I say this? Stationary? Is stationary a good word? That doesn't really make sense, I guess. My price targets are ever updating, if you will. So my price targets come in two ways, kind of. If the price target is derived from a volume weighted average price, then we use those price targets in two ways. One, it's a price target, meaning price goes to target. And then number two, volume weighted average price calculates and eventually catches price, which could happen in two ways, right? If the price never moved and the VWAP eventually caught price, which we know never happens. Why? Because prices don't just stay sideways and flat for like ever at all. So they're always moving, right? So that is never going to happen. Or the other way, which does happen, where price may decline, not all the way to 50, 60s, and then the VWAP calculates to 65. So price target becomes 65, right? So that's where, for example, right now you're asking me, is the price target 50, 60? I gave this same price target like a year ago, a year and a half ago, and the price target was 42K. You see what I'm saying? So someone who may have watched a stream or a video from a year and a half ago would remember that I said price target's 42,000, right? But now it's actually like 50-ish, 60, right? And if you never watch another video and Bitcoin goes to 50, 60 and bounces, and you're like, oh, that kid said it was 42. No. What I said was my price targets are ever evolving. It's either when price meets target or VWAP meets price. And it can happen in both ways. It's a constantly ever updating price target. Exactly. So this is also where I think a lot of other investors and or retail traders may find themselves struggling, which say we all go through the same path in the market to a degree, I guess. Not really, but we all got these learning curves, right? So if you look at price as just a horizontal playing field, you may look back to the past and find a previous low or a previous bounce in the market. And you would say to yourself, that's support. Now, the previous bounce and that previous low, it's stationary. It's not going anywhere. It happened, right? It is imprinted in time and in history. That's where the bounce was, etc. So if you take that and extrapolate it sideways, yeah, your price target's never going to change, right? Whereas mine will, So as it relates to VWAPs, right? If you take a Fibonacci would be pulled from a high to a low, right? Those Fibonacci's extensions and levels, they are in place. They are not going to move. You have given them a definitive structure and a definitive map, right? The volume weighted average price arguably is an ever updating, breathing, target. So, nonetheless, just like you kind of see here with this VWAP, right? So this VWAP on the low, right? When the market was all the way priced on the low, the VWAP was down here. And then it bounces a little bit, and the VWAP calculates up, right? So on this day, the target would be 82. On this day, the target would have been 84. And on this day, the target would be 84,625, right? So it's ever updating as price goes up. And then when the market decides it's ready to pull back and price meets VWAP, target is complete. We did not look left at previous price action or candles and go sideways, sideways, sideways. No, we took volume weighted average price and used it as an evolving, updating price target, if you will. So it's a great example. And then you can also see with like the next one. Now this one didn't work perfect for a bounce, neither did the one, but pretty good. But ultimately, if you were like, all right, this previous low, like that's where my support's at, right? that never hit. If you look at the VWAP what? Keeps updating upwards, 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 upwards. Granted, this isn't like a great hold, it shakes below and whatever, but you can already see how if you just go look sideways and left, how your target may have never been hit or touched, whereas if you look at an updating trend developing system, you may have found it with more use. Sheeb AUSD. Yeah, I don't follow SHIB, so I wouldn't personally know what's going on there. Oh man. All right, so yeah, so obviously if you look at the Nasdaq's going up. If you look at the SPY is kind of bouncing, and if you look at the market internals, what's going on? You will see that you'll see the Magnificent Seven are going up. What's happening to the market? It's going up. Look at the S&P issues on the very top left. You can see they're going down, but then go look at the S&P on the market. Like literally go look at the SPY and then look at the S&P 500 composite advancing declining issues. They're literally down, but somehow the market's going up. Explain that to me. Because academics would tell you that, the advancing declining issues of the market, there can be some whatever, right? But it's obvious because right now we're just basically moving markets up with a handful of stocks. Not that there's anything wrong about that, not that there's anything right about that. It's just is what it is, that's it. Now, if you're someone who only watched the advancing declining issues of the S&P 500, you'd be like, this shit makes no sense. You're like, this literally makes no sense. And you're right. It would make zero sense that the advancing declining issues of the market are going down on the S&P, but somehow the price action of the S&P is going up. Right? That would be like 2 plus 2 equals $6,520. Totally makes sense. No. Well, I mean, it does. But it's just the Magnificent Seven, guys. What a beautiful day, honestly. How cold is it outside right now? Can't wait to... I had so much stuff to do this week. A lot of stuff. $20 degrees outside. Yay. Yay. Junito Bampe. Trash. Maybe? Well, it would have worked, but not too shabby. Trash. Could you sleep in 40-degree weather? I'm sure you could. Do I want to? No. Can we just get anything that's halfway decent? No. Probably not. Just, it's actually... Little JJY. Little JJY. Oh, man. Tired. Alrighty, so let's see. Is the NASDAQ ever going to do anything? Well, no, NASDAQ is still bearish. The market kind of looks kind of like trash. It's not looking so hot. It's a big old lower high in the market. But then again, we did kind of expect there's new. We'll see. I mean, I don't know. We'll see if we get a bear market start in 2026. A lot of people are calling for like 7,000s on the market. I don't know. But one thing I do think we're going to see a recession or maybe a bear market start in 2026. I'm hoping I'm wrong. But we'll see. I mean, I really would much rather be wrong about that. You know, I hope that I'm not right about the market going into a bear market like I was Bitcoin. It's literally starting the exact, that's what's crazy. Literally predicted the exact month our bear market would start on Bitcoin. Literally. And so I literally hope that I am nowhere near as accurate with the market, which I probably wouldn't be. I don't think I will be. But yeah, we really hope that does not happen. It's going to suck. Well, then again, my portfolio is positioned in a way that would probably be just fine even if we did. But it would still suck. Yeah, I mean, I don't know. I don't know. Let's see. How's silver doing? Silver just chilling right about 57. The gold still not to a new all-time high, but hopefully soon. 10-year yield didn't really do much today. 20-year, or is that 2-year? That's the 2-year. Yeah. 2-year yield down to 3.48. 10-year down to or at 4.16. How's little Nvidia doing these days? Let's go to our 30-minute, see if it's entering a long. 30-minute on. Nvidia is bearish. Microsoft is bearish. Nvidia is bearish. Google is bearish. Apple is bearish. UPS is starting bearish. BRKB is bullish. Lilly is bullish. TSM bearish. Tesla bullish. UNP bullish. JPM bullish. Visa bullish but moving bearish. Amazon bearish. Netflix bearish. Meta just flipped positive today. AMD bearish. AVGO bearish. Honeywell bullish. Coca-Cola bullish. Go to the top. Bitcoin. Oh yeah, we already know you. Yep, so that's what's going on in the market. Alrighty. Oh, wow. That's lame. So lame. That's not bad. Hey, the market is going upwards. Who would have thought? Not me. Remember, guys, Magnificent 7 currently on the long path right now. You can see we're getting what? We're getting higher lows, higher highs. So up, pull back, higher low, up, pull back, up, pull back, up. So what happens? You see the market, it does what? It goes up. QQQ, it go up. So all we can do is get our pipe, load up the hopium, and hope that it keeps going up. Why? Because up is better than down. Oh, man. Okay. Wait a second. When a tick? What a battle. When a tick? Why does this look so goofy? I don't know. I'm confused. Oh no, the market is going down again. No. Yeah, again, it's pretty straightforward. 3 rank candles here. Magnificent 7. Market tops up, rolls over. Same thing as always. No change a day. We'll pop on. Oh, wait, where'd that go? What the heck? Oh, there it is. We'll pop on the old M1 here. We just started this portfolio, I don't know, a couple days ago or whenever it was. So this will be our little ongoing fun team building experiment, which is really it's super simple. There's will be a couple different portfolios mixed into this account. But yeah. So we'll get it. Maybe I might have to create like a Google form and put it in the description so everyone that looks at that knows exactly what each portfolio does and why it does it and so on and so forth, so we don't have to explain it every single day. But I'll give you guys the quick scoop, which is pretty much we have 3 accounts in here. You got a dollar cost average one. Again, we're just going to do this very simply, like how most people would. Again, this is literally simply for the YouTube stream and more of like a case study thing for the average investor. But we got 3 portfolios in here somewhere, which is simple dollar cost average strategy. So this is literally just a simple dollar cost average. Where's the other one? There they are. I think I'm going to remove the Roth, and it's just all going to go into these 2. And then you have the smart money portfolio, which is going to be standard deviation investing, 50 SMA buy signal stuff, along with I don't know, we might change this from just an S&P 500 or VTI VU to we might do some international stuff in here. We might throw in some bonds. I don't know. I haven't really decided how I want to do the smart money portfolio, but basically it's to differentiate between average, simple, zero thought investing, DCA, SPY, etc., then a secondary portfolio that's a little more actively managed, if you will, so you guys can see the comparison over probably the entirety of my life. So as long as I'm behind the YouTube stream, this account will be going for pretty much the existence of my life or YouTube. So it'll be a great case study that hopefully one day a bunch of people can go back and use as a resource for learning, 40 years from now or something like that. Now, essentially, these would do really well. At least the dollar cost average portfolio would do really well if the market does well. Now, if we find ourselves in a United States economy or market similar to that of Japan through like the 2000s or whatever, then the dollar cost average strategy would do absolutely terrible, right? Which basically goes on to, every single financial advisor, every single article, this, that, the other was like, if you just put your money in the S&P and blah, 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 and you leave it, right, you're going to be making so much money. It's like, yeah, that's because the market has pretty much gone up for forever, right? That strategy falls apart as soon as the market does not put on extreme gains year after year after year after year, right? So it'll be interesting to see how just that simple dollar cost average portfolio does over a long period of time, especially if the market goes through straight Japan style shit, and then how the smart money portfolio would work in comparison with the mixture of bonds, some international exposure, things like that, So it'll be fun, little case study for all of us here to go through together. And again, this is outside of the real estate portfolio. This is like straight up YouTube stream fun, what have you. And so also the objective is to hopefully make this somewhat realistic for the average person, right? Like, I'm not going to try to sit here and just start throwing thousands and thousands and thousands of dollars in this account every single day, because no one can do that on average, dude. Most people can't even pay their credit card bill every single month, so that would be super unrealistic. All of the bigger stuff will always be my real estate portfolio, and some other things, if you will. Some of the 401k accounts I have, we'll see. But I don't want this to be, I don't want necessarily, at least this simple DCA strategy portfolio, I will try to make as realistic to the average individual. Again, you want it to be somewhat relatable, right? So when Warren Buffett's like, yeah, just, or like, when it's funny when you hear like some of these big financial guys on the internet talk, and it's like, yeah, just do this. Like, yeah, it would be great if I just had $1 million to swing around like it was nothing, but I don't, right? No one really does on average. So, what people can do is they can do a couple $100 a month. They might be able to do a few $100 a month, something like that. So that's the idea of the simple dollar cost average strategy, is to make it relatable to lower income individuals realistically, because those are always the people that are scared to invest or find themselves never investing, when you could work at McDonald's for your entire life. There's nothing wrong with that, right? You could work a lower income job for your entire life, and as long as you find a way to take a little bit and keep going, generally speaking, it will grow if the market grows. Now, if we hit a Japan style situation, we're all cooked. So we can all sing Kumbaya together. All right. Oh no, the market's going down. What happened? Oh, I see. Yeah, the Magnificent Seven stopped going. So like, this is a perfect example, right? Look at this. So we saw all morning the S&P issues are going down. We see all morning the New York Stock Exchange issues are, oh, come on, damn it, going down, right? So, yeah, I mean, those are going down. These are going down. The only thing that was going up for like a hot second were the Magnificent Seven stocks, right? Now that those have stopped going, started rolling and giving a little bit of pressure, what's happened to the market? The market's kind of rolled over, starting to fall apart a little bit, right? But what do we also know? We know that we don't just rely on the directional momentum of the Magnificent Seven stocks. We know that we essentially look at other things. What other things do we pay attention to? We pay attention to the volatility index, right? And so we know that today the volatility index has been on the fear side, right? Granted, it's only priced around $16.50 and $17, so I would say the average investor would assume that the VIX isn't in a like the VIX isn't fearful because it's not super high price, but that would be a little inaccurate. We have actually flipped the VIX back to the positive side of trend, right? So the market is slightly fearful, right? So since the market is fearful, the market is not positive, etc. We're getting a very lackluster market that's still going down, right? So we just know here on this stream that we will see more long bias movement on the stock market when the stock market tells us there should be more long bias movement on the market, right? So, do not be fearful. Well, that's funny saying don't be fearful when the VIX is saying to be fearful. So maybe not the best choice of words there, but do not be scared. There's no need to be scared. The market may be going down. Again, this is extremely normal stuff. It's literally a repeating system over and over and over. There's nothing that's happening today that isn't normal, right? There is nothing that's been happening for the past week and a half that isn't normal. These are all very normal things we see in the market, all right? So that being said, we're just going to keep waking up every single day, coming on the YouTube stream, and when it's time to see the markets rally back into a long, you'll know it. Actually something else I wanted to kind of talk about, right? See, do any of you guys see a pattern here? Do you see like maybe like a bull flag or something? Ready? Look at. Okay. You are more likely to see like stock pattern formations when you start to focus your attention around the right levels, right? So just like the other day, we kind of had one too. See how the market breaks over the 50 SMA? That's where it starts to get positive. Then you see how it kind of curls and creates a flag, right? Same thing here, how we take the VIX up and above the 50. Granted, it kind of chops it a little bit, but ultimately we're starting to establish a little bit above that 50 SMA, aka trying to be bullish, trying to flip positive, trying to go into a bullish move. And what are you starting to see? You're starting to see the development of a pattern that's arguably what we would describe as a bullish pennant or a flag pennant or something, right? Now, granted, I don't use these to actually trade, but I just recognize them because A, I've been taught them, but also because when you start to focus your attention in the right areas, you'll start to see these patterns more often, right? Now, I don't use this and go, oh, it's a bullish pennant, market's going to go up. That's not even close to how I think. It's more like, okay, there's a pattern here, and if it ends up breaking out, like, cool, sweet, whatever, right? But it's not like we use that, or at least I don't really. Should I? Maybe. Do I? No. I don't know. So, that's that. Where's my zoom out? Let's go to a 30-day, 30 dirty. Wow. Would y'all look at that? I mean, you can even see it here too. I mean, this one we break up. So now the market's positive. I don't know. Some might call that like a cup and handle or something. I don't even know what you'd call that, but I can kind of see something in there, but not great. Oh no, the market's going down. I'm gonna lose all my money. Why did I do this? Why did I ever think it was a good idea to invest into the market? Oh no. What am I gonna do? Shoot. Can't wait to get on that universal basic income. Oh no. Oh no, guys. Oh no, no Santa rally. Watch there be no Santa rally this year and I just get straight cooked on this little position I got. Shows how much I know. Nah, I'm just kidding. It doesn't even matter. This thing could go down for my entire life and I'd still be fine. Man, our YouTube streams just be crushing, dude. The YouTube streams be crashing. Sorry. Like I said, when you just kind of sit in your office by yourself all day, every day, you might get a little weird. Alrighty. Let's do... Oh, wrong thing. We're going to do a little portfolio update on real estate. Where's my... There it is. Should I? Yeah. So, what? There. Wow, that was weird. I don't know how it shot over there. So, wait, what? That was weird. There we go. Maybe I should. I could have said put it there. All right. So, update on the real estate portfolio. Trailing 12-month down 16%. You can see there's been a lot of expenses lately. We're doing some capital renovations across. Well, one house, but we kind of got hit with a big plumbing job on another house. Finishing the garage on another house, so we're going through an extensive remodeling of a lot of properties right now. So the idea is that when we aren't doing that, we'll start seeing some positivity back on this portfolio. Now, I think last week or whenever I last showed you this, it showed net worth somewhere around like 907,000 around something over the 900 mark. It's down to 895 now. That's because I put some capital expenses on a credit card attached to this. So now it's seeing it as obviously a debt obligation. So it's removing that debt obligation from net worth total. So when that credit card balance gets reduced, obviously net worth jumps back up, etc. So you know, sometimes you might see an extreme fluctuation on his portfolio, and a lot of times that could be due to just current credit card balance for capital renovation and things like that. But once that balance is reduced, then it jumps back up, so on and so forth. So that's kind of that big decrease we've seen there. Now, moving into this guy here. So this is one of the individual properties, but... So this one just got hit with the plumbing job, so that's kind of that big pink thing you see there. So, but anyways, this one was operating at some negative cash flow for a little bit of time because we did an electrical panel that was going bad. That was a big capital expense, etc. over the past like year, and there was something else we did. I forget. We had to get a fridge, we had to get a stove, we had to replace a water line, whatever, right? So we're finally on the trailing 12-month, brought this back to a 6% return. That's great. Granted, this one makes a pretty hefty cash-on-cash return per month. So once we get through these next couple months and so on and so forth, I'm assuming that trailing cash-on-cash return is going to jump nicely. So that'll be good. And as far as our little shitbox lemon house, trailing return minus 54%. This has been down. This property's been vacant for 1 year as we've done a ton of remodeling. This is like the second time we've had to do a bunch of remodeling on this house. We had a Section 8 tenant just basically destroy the place, sanded, refinished the floors, and then I don't know what they did, but I don't know what they did. But anyways, I did sand and refinish some floors here and there, and then some furnace stuff. Anyway, so this one's just basically the bane of my existence. But the good news is I pretty much, the amount of stuff I've learned from this house is invaluable for my future. So, nonetheless, there's that one. So, kind of a shit one. Not really, but it is. It's actually a good house in a great area. But just an older house that just has so much work to get it to where it needs to be. And one day we'll get there, but this is like the worst performing asset that I own and I've owned over the past 5 years. So maybe one day it'll work out, but for the time being, she's been a bastard. So there's the update on the real estate portfolio. Cheers. Oh no, the market's going down, guys. What's going on? Oh my gosh. Did someone wake up this morning? Did some did some generous fellow wake up this morning, get on a YouTube stream and tell you do not be extremely long biased the stock market because we shouldn't be, and then next overall the market's down again today. Like, wow. What a guy. What a gentleman, What a stud. What an absolute stud Magoo. Oh boy. Seriously, come on. Where's Santa Claus for the Santa rally, dude? I wonder what the news is looking like. Well, obviously we already know the news is bearish. Like that's a given. Like obviously. And what did they come out? Oh yeah, so Tuesday was Tuesday. They did the jobs number stuff or unemployment. So we obviously know that the news is going to be something like, oh, unemployment shaky and markets down, or U.S. unemployment rate causes investors to be weary and sell off equities or whatever. So let's just see, but we already know that's what it's going to say. But I'm wondering if we're starting to get a mixture of like, I wonder if they're spreading fear about there being no Santa rally or something like that. I got a phone call coming in. I'll be right back. Sorry about that. I'm back, yo. Oh, wow. So, not a whole lot's happened in the market. Actually, you know what? Something I haven't even looked at today was VVIX. To be honest, let's take a peek at that. Yeah, I mean, makes sense. I mean, if we look at the VVIX too, you can see that markets have been, they're a little on the hedge side, right? So these guys are, so smarter players are a little hedged, which makes sense. Market's been going down, right? So when the VIX breaks down, when VVIX breaks down, we'll see the markets boost back into a long, and maybe the market shift positive, and then we get a nice little Santa rally. Let's take a look at the news. What did the news say today? All right. 6 minutes ago, stocks fall after delayed jobs report. Oh, figures. Couldn't see that one coming. Stock market today, 500 slips, NASDAQ gains, job reports beat estimates, stock market index is mixed on surprise job reports, stocks sink after delayed payroll, Wall Street sees muted reaction after noisy jobs market. Jim Cramer, 10 things, shut up Jim. Tesla stock broke out, but this longtime bull decided something, who knows. Alrighty, cool. So pretty much the news has not helped us at all. Just all basic, you know what I mean? All the same old. All right. Yeah. So I think I don't even know what to say anymore. It's been a long morning already. Did the market have a gap today? I didn't even actually look. Let's see. Yeah, it did. And we sure enough did the old 161 Magoo. But, yeah, we didn't. Let's see. From the open to previous day close. And there, voila, 161. Got him. Got him. But it wasn't great. What about... Oh, that's SPX. Oh, we just got the 1612 of the swing as well. Interesting. All right, another phone call coming in. Sorry. Okay, sorry about that. Had another phone call. Alrighty, so what do we got going on here? All the same old, same old. Market looks terrible. That's in a sell move. We're not supposed to be going up, so we're just gonna have to wait. You know what I mean? Just gonna have to wait for the next buy move on the market. The audio streams current. Oh, that's because I was muted. No wonder why. FDIC to unveil plan on how banks may apply to issue stablecoins. I remember when the banks told us cryptocurrency was a joke. Again, this is why. Never mind. Not going to say that it's not needed. But I guess the better way of saying what I was going to say is that is why you don't really need to read the news too much. Oh my lord. Oh, another phone call coming in. I'm sorry. Alrighty, I am back. Let's go look at Bitcoin, because what else are we going to do? Wow, Bitcoin's just not doing a whole lot. Cool, figures. But actually, I forgot to mention this morning. So what everyone should be doing on the old Bitcoin, if you haven't already, is you should take a VWAP. You should anchor it to the most recent high on the daily, which would be kind of like, well, what is that? I'm being all weird. Stop it. Which would be like here. There's a Just do this. Just actually don't do this. Do whatever you want to do. But see, then you have a break here. So this, again, the setup's kind of goofy on this one, but it would basically be that. That would be our zone. This would be our counter target right now. So we just basically know that the market's going to be attracted to that box that I put on the screen. Why? Because if you look at where... Oh my lord! Another phone call? No, thank you. Alrighty. Yeah, pretty much it's just, we're just going to see those VWAPs get hit. That's pretty much it. That's the long target, counter trend target, etc. Because if you think about this leg, right, this leg has no lower high, right? It's just down, right? So it either has to just keep going down for forever, or it has to eventually bounce, right? So we have two options. Do we think that Bitcoin's just going to go down in this line for forever, or do we think it's going to eventually bounce and put in a lower high? Most likely bounce, put in a lower high. Where is it going to bounce to? There or there, essentially. Whether it be now or whether the market goes down a bit more and then it be later. That's what it's going to do. So you essentially now have the targets in which you pretty much know where Bitcoin's going to go next. Think about that. Largest globally, well, one of the largest globally traded currencies in the world. You now have the pretty much the exact price targets of where that wants to go before it happens. That's crazy. That's good stuff right there. That is good stuff. That's like grandma's cooking. It's good. It's real good. Actually, let's check the weekly here. Nah, well, maybe. Yeah, I guess we did hit the weekly VWAP support there from the pre, but I wouldn't really call that a weekly VWAP. But I mean it is, but I wouldn't really call it support. It's kind of odd. Not anchor. Okay, I see. Yeah, basically those are the support levels right now in this market as far as, I mean, like these are the two areas Bitcoin wants, here and here, which we've already sold into, now bouncing, so or be down my day. I mean, it's gonna happen. I mean, it's just one way or the other. It's gonna happen. It doesn't really matter. You just know it's you know it's gonna happen. You've seen it one too many timerooskies. Yeah, let's go to Google real quick though. Let's type in Santa Rally. It's funny. Let's see more news. Is Yahoo Finance, is the stage set for a Santa Rally? Santa Rally 2025 AI jitters, Fed signals global central banks put. Oh my gosh, whoever wrote that article should be fired. What? Stock market Santa Claus rally hasn't come to town yet, despite what you're hearing. Well, obviously, Market Watch, the market's currently neutral to bearish. Then, like, duh, there's no Santa Claus rally. Obviously. A buying opportunity emerged in chip stocks ahead of Santa Claus rally. How to trade them with options. Sure, CNBC. Santa rally on deck. Yes, yes, yes. Get your Santa Claus rally caps on, then prepare for a come down. Actually, that I kind of maybe agree with that one. Forbes, will Santa rally fail investors in 2025, etc., etc. So we'll see. We'll see. I mean, as we kind of mentioned too, right? You know, it's like if we were going to have a Santa Claus rally, what I would like the best is to see the markets pull back first, right? Scare a bunch of people, then do a rally after we decrease and create a better buying opportunity. So hopefully that's correct. So far, again, the first half is correct. We want the second half to be correct. That's the only thing that actually matters, is the second half's correct. But yeah, so we'll see. What is it? We're only the 16th, so we got 9 days. 9 days. 9 days, and the price action is very far away from the 50, so we're going to need that 50 SMA to catch up here within the next couple days to create an environment that would be easier to flip the markets positive than send off a rally. So we'll see how these shape up, but long story short, all we want to see over the next couple days, weeks, or whatever, or well, weeks, only got 9 days, so what we'd like to see for the remainder of this week is arguably markets go down, markets not go down, doesn't really matter. Ultimately, we just want to see the market position itself leading into Christmas, before Christmas, after Christmas, somewhere in that area for a Santa Claus rally. But we want to see it set up in a way that'll be easy to transition the markets back to positive. And that can really come in two ways, where we have the 50 SMA and the market catch up, and where we break the VVIX and the VIX down and take fear out of the market. And that way you can express optimism back in and rally the market. So hopefully the market sets up like that over the next couple days. But again, I don't make the rules. I just watch the market and let the market tell me. So Webull searches for patterns like symmetrical triangles and bull flags. Yeah, definitely. Some platforms got like those automatic things where they kind of search for patterns and stuff. Well, yeah, anyways, I'm going to get ready to rock and roll here. I know it's a couple minutes late. I got someone coming over to a property down the street, so I got to go meet with them. So, we'll end it there for the day. Hopefully everyone had a good day here on the live stream. Hopefully not hopefully, I know we did. I know we kept everybody on the right side of the market once again. It's crazy, if we think back to the past couple weeks, the YouTube stream here kept everyone long, and then pretty much right here is when we said market is starting to get a little shaky. And then we pretty much, all right, you're in a sideways market until you break down that structure. Now you've broken down, and there's your leg down. But yeah, we pretty much kept everyone long and then said yield, neutral, bearish. And now market is down, right? I mean, dude, you can't even get much better than that. I'm glad I sat and watched the market for this long in my entire life, because now I can comfortably come on the internet and tell everyone to be long for 14 days, then chill out, expect a change, and then market change. That's wild. That's pretty good. Not bad. Anyways, you guys have a great one, and I will catch you back tomorrow morning. Cheers.